And we stick with that as we move straight on to the day's business news. Those big drops on global markets as crude oil prices have crashed amid that potential price war between Saudi Arabia and Russia. And Brian is here from our business desk. Brian, you've got all the latest figures for us.
Well, like you said, Stuart, a really bad day on the market so far. Major dips on all indexes so far as the sell-off that began in reaction to coronavirus fears takes on a new dimension. European indexes plunging at the open. London's FTSE 100 quickly dropping over 8%. The CAC 40 here in Paris down nearly 4.5%. The Frankfurt DAX off by nearly 8% right now. Asian indexes tanked as well in Monday's session. The Nikkei in Tokyo dropped over 5%. Hong Kong's Hang Seng down nearly 4%. The Shanghai Composite off nearly 3%. Kospi in Seoul over 4% in losses. The big driver in Monday's sell-off, a huge crash on the crude oil markets. Prices have fallen by their biggest margin since 1991. Brent crude futures are off some 26% to trade right around $34 a barrel. West Texas Intermediate down 25% to trade just over $30 a barrel. Now, trading in shares of Aramco, that's the Saudi national oil company, were halted Monday after losing 10% as exchanges in Riyadh and Dubai both post major drops, as we see there. Oil prices have been on a steady decline since the outbreak of coronavirus in China as travel restrictions and contagion fears hit demand for crude. The latest crash, though, is the result of a failed agreement between the OPEC oil cartel and its ally Russia. The deal to implement new production cuts fell apart over the weekend, leading the Saudis to slash prices while ramping up production, sparking fears of an all-out price war in crude. Monty Francis reports.
Oil prices are experiencing their steepest drop since the Gulf War in 1991. The plunge, a result of an unexpected announcement from Saudi Arabia on a steep discount in oil prices to its customers in Asia, the U.S., and Europe. The move has added to uncertainty in the global markets already reeling from the coronavirus. Stocks across Asia fell as a result, as did markets in Australia, where that country's treasurer tried to put a good face on the turn of events.
And I note that some announcements by the Russians and the Saudis in relation to oil overnight, and we've seen a steep drop in the oil price in recent weeks. So there are a number of factors at play when it comes to the equity markets. But our financial system remains strong, our economy remains strong.
The Saudis' decision was in retaliation for Russia's refusal on Friday to join OPEC countries and a cut in production in response to the coronavirus outbreak, which has slowed demand for oil. The Saudis and Russians could still reach a compromise, but in the meantime, analysts say oil prices could fall further, hurting oil-producing countries across the world, including Venezuela and Iran, already suffering under American sanctions.
One sector hit especially hard by the COVID-19 outbreak is the global tourist industry. It contributed some 8 trillion euros to the global economy in 2018, and it is now in serious trouble as people think twice about traveling and major destinations take lockdown precautions to try to contain the spread of the virus. Natasha Miller and Nick Rushworth have the story.
The Church of the Nativity in Bethlehem closed to the public. The Umrah pilgrimage to Mecca and Medina cancelled. Tourist sites in many countries are now on lockdown, putting travel companies under pressure. People are asking whether they should rethink their international travel plans.
People are asking about a whole range of destinations, not the places where there have been cases, to say what would happen if. Well, the best would in the world, we can't, it's very speculative and probably it never will happen.
While some travel professionals argue the risk is acceptably low, others stress that heading to the main centres of infection should be avoided.
The overall advice is not to go to Category 1 countries because the risk is perceived as too high. If you choose to go to a Category 2 country, then there may be some risk, but that's partly your decision.
A decision all the more complicated with the virus spreading rapidly. The International Air Transport Association forecasts a potential 13% loss of passenger demand for Asia-Pacific Airlines this year. Losses globally could be in the tens of billions.
We are seeing this serious decline in bookings and revenues outside of Asia Pacific now that this has spread more widely.
Another indicator in Europe is that flight reservations to Paris, one of the world's most visited cities, sank 12% last month.
So a lot weighing on the global economy on Monday, sir. We'll be keeping a close eye on the markets as the day goes by.
Yep. Thank you very much, Brian. We will indeed hear on France 24. Thanks very much.